Gas station sales just jumped 21.4% in a single week, and furniture stores are bleeding out. These two numbers come from the same country, the same week, the same Bank of America card data. They are moving in opposite directions at the same time, and the reason is not consumer sentiment or interest rates. It is a single barrel of oil sitting above $110. Most of the market's attention Thursday was fixed on the big picture: President Trump's address on the Iran war, the Strait of Hormuz, whether crude would hold above $100. WTI touched $110 after Trump vowed to hit Iran extremely hard, with no exit strategy offered. Stocks opened sharply lower, then clawed back to green after Iran's deputy foreign minister signaled a tolling protocol for Hormuz passage, not a blockade, a toll booth. The S&P 500 closed up 0.72%, Nasdaq up 1.16%. On the surface, markets absorbed the shock, but the damage was already flowing downstream into every gas tank in America. Bank of America's weekly card spending data, covering the period ending March 28, shows gas station sales up more than 20% for 6 of the last 8 weeks. That is not a spike. That is a sustained reallocation of household budgets. Chime CEO confirmed fuel spending on their platform rose 25% this week alone. Every extra dollar spent at a pump is a dollar not spent somewhere else. The somewhere else is becoming visible. Department store spending is falling. Furniture purchases are falling. These are the categories that benefit most when consumers feel financially comfortable. Big ticket, discretionary, deferrable. Gas is none of those things. You fill the tank or you don't get to work. The substitution is forced, not chosen. This is what Fortune called the K-shaped oil shock. Higher income households absorb the gas price increase and keep spending broadly. Lower income households, who spend a larger share of income on fuel, compress everything else. The result is not a uniform consumer slowdown. It is a split, where the same war produces different economic outcomes depending on where you sit in the income distribution. Gas station operators and defense contractors are absorbing inflows. Furniture chains, department stores, and casual dining, the categories that rely on the bottom half of the income ladder, are seeing the money leave.
McDonald's read this shift early. The chain announced Thursday it is standardizing a value menu of 10 items under $3 starting April 21, simplifying 2 years of overlapping discount offers into a single, legible price point. That is not a promotional strategy. That is a defensive posture for an environment where their core customer is allocating more dollars to the gas pump. The verification benchmark is simple. Watch April retail sales data, due in roughly 2 weeks, alongside the first consumer discretionary earnings of the season. If furniture and department store same-store sales confirm the BOFA card data trend, a sustained double-digit decline, then this is not noise. It is a structural reallocation that will run for as long as Brent holds above $100. The weight of evidence points toward widening divergence between energy-adjacent spending and discretionary retail. That holds as long as the Hormuz situation remains unresolved and pump prices stay elevated. If Iran's toll protocol evolves into a genuine off-ramp, oil back below $90, gas prices retreating within 4 to 6 weeks, discretionary spending could recover faster than expected. Consumer balance sheets are not in crisis. The compression is price-driven, not debt-driven. That means it reverses when prices reverse. What would prove the bearish case wrong? A credible ceasefire framework before the end of April, WTI dropping below $95 on the announcement, and gas station weekly sales falling back below 10% year-over-year growth within 2 reporting cycles. Until that happens, watch which retailers pre-announce guidance cuts in the next 3 weeks. That list will tell you more about the war's real economic damage than any oil price chart. Ex post. Gas station sales 21.4% in 1 week. Furniture stores falling. Same BOFA cart data, same week. $110 oil is not just a market story. It's a forced budget swap. If Brent holds above $100, watch discretionary retail miss guidance in 3 weeks. If oil retreats below $90, the consumer snaps back fast. XLP XLY.